everybody, this is Dan Sheridan. This is Monday, Feb 15, beautiful day, and this is what's going on in the market. We're one day after the big CPI number that came out yesterday before the opening, and yesterday was more of a nothing burger. Not a whole lot happened. Right now, if you see the SPX, this is a one-year price chart. We're at about 41.22, down 13 points. You know, we're well above the 200-day moving average. We're right around that 9-day exponential moving average, kind of a short-term indicator. Volatilities are continuing to be heavy. They're in the lower end of the last year and a half, whatever. We're at 18 near 18 volatility in VIX. Now with the news out and everything, there's not a lot of big price candles, in terms of difference between the high and the low during the trading day. So that's kind of trending down. And I think it's decent for range bound trading right now. After moving up quite a bit in January, now we're kind of channeling a little bit here. So as I look at trades here, one trade today, what's in front of me today? Wednesday, Feb 15, 1 day removed from the CPI. Not much news this week. I may be looking something, get me a little more theta, something that, maybe 2 weeks from this Friday. So 2 weeks from this Friday would be 16, 17. Let's see. That's going to be about, and we want a Friday expiration. So that'll be March 3. So if you look at March 3, even with the lower volatility, what do I mean by lower? If you look at VIX, it's in the lower end of the 6-7 week range. So you say, well, would we want strategies that benefit if the volatility goes up? Yeah, but there's certain short volatility strategies like butterflies, depending on how you do it. If you do it more balanced, they're fine on the way down. So you can't make a blanket statement, I want long volatility stuff. But staying in that mode, let's just look at a basic trade here. Being in this low volatility environment, a calendar trade. So give you an example of one. So if I'm looking here, I'm looking to sell the March 3s 2 weeks from this Friday. So this would be 16 days till expiration, and maybe go 5 days between the long and the short. So maybe I'll buy on March 8th. Keep the cost relatively low. And if it's non-directional, you're going to go relatively where it's trading at. So if you look at this, 41.20, let me just make it a little bigger for you. And there we go. So, in a calendar, what is a calendar? You're buying the farther out expiration, you're selling the closer in, and you're doing the same strike. If you're neutral on the stock, you're doing more at the money, bullish, use a higher strike. If you're bearish, use a lower strike. So here we are around 41.18 at the money would be 41.20. The blue line is your graph at expiration in about 16 days. Your purple line is today. So over time, the purple graph will morph into the blue graph. I was going to say bluegrass. That's a different discussion. So we're at 41.20, and then you have these things. Then you have these things called expiration break evens. And so if you're a visual person, even if you don't know a lot about options, if you look at these expiration break evens where the expiration graph crosses zero, you can see on the vertical axis, you have your P&L, On the horizontal axis, you have the prices of SPX. That's where we're at right now, which would be 41. We've actually dropped a little bit, 41.13. So I think I'm going to massage this a little bit. If I were to put it on right now, at the money would be like 41.15. So we would go 41.15. And the price 41.15. So you can see this is a positive theta trade. You're bringing in about 22 bucks of theta a day, and this spread is costing around $8.40. You can see the theta. It's about close to 3%. The theta is 22 bucks. It's about 3%. So, you know, the goal, if I'm putting this trade on today, 16 days out, I'd like to be in about 20% of the duration. So I'd like to be out by Friday at the end of the day. That's my goal here. And again, as long as we're between the expiration break evens, right, which would be 450 on the downside and 41.90 on the upside. So you can see, you know, we've got about a good near 70 points. And as long as we're between the break evens, and I'm giving you a relatively simple explanation here, there's more to it, but as long as we're between here, it's like percolating like a good cup of, if you're old enough, Folgers coffee, you know, kind of percolating here. And this decay also will get bigger. So you make your money in a calendar because you're selling a March 3 expiration, and you're buying a March 8th. Well, the March 3s are going to decay, even though you're paying more for the March 8th, and it has more extrinsic value, your March 3s are going to decay more. So that's a calendar. And then kind of as you go, if you start going outside the expiration break evens, then you got to take it off or adjust or do something. But usually most of this area in here, it percolates, and then we have a plan. Anyways, all that to say, this is one of the trades that we do on a pretty regular basis. We have a new class coming tomorrow, our Feb 3K class. We started Tuesday. It's a 4-week class, probably our most practical class because you get the teaching. We put the live trades on. We've been doing it for a year and a half every month. And the class has been winning on about 75% of the trades when you have proper risk management. And what give it a shot. We start tomorrow. You could check it out on Sheridan Mentoring, and all the live trades we do, you monitor them. So we're teaching you the craft. And what we also have, what you get in the class is we usually start up like tomorrow, Thursday. We'd start up at 12 Central. That's we call it boot camp. And that'll be about 45 minutes of beginning material for those of you who are more newer. And then the 3K class starts at 1 Central and will go for an hour. It's a little more medium advanced, more medium. And then one thing we're doing after a year and a half, we're starting for people who are in the Feb 3K class, we're starting an advanced class that'll be starting next week, Wednesday, and it'll go once a week. And there's been, you know, for people who've been in the 3K class for quite a while and they're becoming good craftsmen, this is kind of just expanding that a little bit. But we'd love to have you in the class. Again, we have a boot camp for an hour each day. So for those of you who aren't familiar with a lot of these types of strategies, butterflies, iron condors, calendars, etc., and risk management, that's where we laid the foundation for you. So folks, have a great day, and we'll see you tomorrow in class. Thanks.